Hello again everyone, my name is John, and as 2022 closes and 2023 approaches, I'm very sure you're on the lookout for sustainable themes or industries you should be looking at as an investor. And in this video, I'm going to cover three what I feel are very sustainable themes going forward, not just for 2023 but many years beyond. So stay till the end of the video to find out these three themes that I'm looking at. As a disclaimer, this video is purely for educational purposes only and does not constitute any buy or sell recommendation. Please do your own due diligence and do speak to a licensed financial advisor or financial planner if you do require licensed advice. So the first theme I want to talk about is the population pyramid and the changes in generational gap that we're going to experience over the next few years. Those changing consumer behaviors from the silent generation all the way to Gen Z and also Alpha. So for those of you unfamiliar, let me just go through some basics of what the generations are. We start off with the silent generation, those born anywhere between 1928 to 1945. These are the guys and ladies that actually witnessed the World War I, the World War II, the Great Depression, and their way of a social network is actually the Rotary Club, which I found pretty apt. Then we have the baby boomers, those born 1946 onwards till 1964. How they socialize and network was actually in a pub, which was quite true. I mean, when I was growing up in a teenager, I'm a Gen X, by the way. So when I grew up as a teenager, yeah, that's how you see your adult generation actually hanging out. And Gen X, 1965 till 1980, end of the Cold War, the fall of the Berlin Wall. They grew up with computers. You know, I grew up with computers in my primary school, and we just started surfing the internet. And the way we network was actually Facebook, right? And the millennials, born in 1981 till 1995, constitute about 22% of the population today. They used to be the biggest cohort. That was before Gen Z actually trumped over them, and I'll go a little bit more into Gen Z later, but they had to witness 9/11. They started off with music streaming. I mean, this was the generation when YouTube was at its prime, when they launched in 2007 all the way until where we see it today. Their clothing, very like Mark Zuckerberg with a hoodie, athleisure. That's the genre of the clothing that they would normally wear. Sportswear, make it comfortable. Here's how they hang out over social networks. It was over Instagram, right? And I don't really hang out on Instagram. It's just not my thing, right? And last but not least, and this is the biggest cohort today, Gen Z. Those born 1995 onwards, they form the bulk of our population today, 32%. They had to go through COVID-19. And you know, my daughter is within this bracket, and she had to go to school in isolation for 2 years, homeschooling and all that. Ironically, they're more earth conscious, I would say, and they would rather have recycled apparel. They don't mind because they're buying into a cause, and that's something that is also very predominant in the late millennials. When I say late millennials, meaning those born slightly closer to 1995, they have inculcated a bit of the Gen Z behavior. Their greatest fear, low batteries. You know, if they're going out, they can go berserk because their phone is running out of battery. Yeah, that's how connected they are, right? They have embraced the sharing economy. They rather take a Grab, rather not own anything, a minimalist lifestyle, FIRE lifestyle, you know, financial independence, retire early kind of lifestyle. And they are mainly on YouTube and TikTok, especially TikTok, right? So this is the generations at a glance. And as you can already see, different social network styles, different travel types, different consumer behavior. So not understanding and harnessing the knowledge of this as a business will be very detrimental. And I think it's very important that there is a business need or business solution catered for all these needs of different generations. Even though Gen Z has trumped the millennials as the largest cohort in our population, the millennials do make a big cohort, 23%. And as you can see from the heat map being shown here, China has the largest. Of them all, 24% out of a population of 1.1 billion. That's insane. Obviously, with the one-child policy, there definitely is a decline in the birth rate in China, and we're going to talk about that later. But for now, let's look at other regions where millennials make a mark. 21% in the United States, 25% in Latin America, and 22% in Australia. So you see, millennials on average make up about 1/5 of our population, and they have a very wide-reaching influence on our economies. How clothing companies actually fashion up or design up their clothing, how environmentally friendly they are, how much companies embrace ESG, because this is a very, very well-educated cohort. They are much more aware of global happenings. They're much more aware about social causes. And I think if companies ignore this and do things for pure profit reason only, I think they're going to lose out a very big chunk of the millennials, as well as the Gen Z and also the alphas that are coming. So as mentioned earlier, Gen Z make up the biggest cohort of our population today, 32% of the entire cohort, or roughly 2.5 billion citizens. Now, Gen Alpha, yet to be seen how big this cohort will grow, but also be cognizant that there is a huge decline in fertility rate. That means that there's not enough babies being produced to replenish the population. And even though the cohort seems to be growing, we have seen evidences from the research I've read. Just look at Singapore. I mean, birth rates, fertility rates of 1 point something. That means for every couple, every family that is being formed, they only have one child, and it's not even enough for a 1-to-1 replacement ratio. Couple that with China, one of the largest populations on earth, with their one-child policy working so effectively that in I think about 20 years' time, China will have a drastic decline in their workforce. Now, why is that important? The workforce cohort is needed to replenish those retiring, those in the silent generation, those in the baby boomer generation that are about to go into retirement. And the workforce is important even though there's robotics, there's automation to automate a lot of the work. But there's a lot of service-based industries that cannot be replaced by automation today. And that's why government policymakers around the world are throwing money. You know, even the Singaporean government is like throwing allowances at Singaporean citizens to increase their fertility rate. But that has not latched on because access to quality education, access to medical care, everything is on the rise. Inflation rate is on the rise. And that has actually stop parents from having more children. And yeah, so you can't get a gun, point it at the parents' head and ask them to have more kids, right? So that's where it's very interesting to see, as both an observer as well as an investor, how government policies, how declining birth rates, fertility rates, and how certain cohort behaviors actually influence businesses and economies. And if you're a keen observer, you know where to place yourself and your bets to rise with certain themes that I'm going to describe in this video today. As you can see in chart 2, the fertility rate for women in the year 2000 was about 2.7. That means for every family, you should actually have about 3 children on average, 2.7 roughly there. But coming to 2050, global fertility rate will drop to about 2.1. Now, this obviously is an aggregate across the globe. If you've seen certain countries like Japan, Korea, and even China, you see that the fertility rate is actually below 2. It's hovering about 1 and sometimes even negative, especially in countries like Europe. But even though fertility rate has dropped, life expectancy has actually increased. That means we're living longer, living not necessarily healthier lives, but we're definitely living longer because of modern medicine, health awareness, and better access to sanitation, hygiene, and all these kind of things. Therefore, even though with a fertility rate reduction, our population tends to still grow. However, that growth rate will continue to decline as fertility rates decline, and this is going to be an issue on how we're going to feed the growing population. Is going to hit about 10 billion in 2050. Before we go into how to feed the 10 billion population by 2050, which I'll cover in food security later, I first want to address the wealth being held by the different generations that we live in the world today. As you can see in the top right-hand corner, the silent generation and the baby boomers still hold a chunk of the wealth. 26.4 trillion by the silent generation and 65.3 trillion by the baby boomers. We're going to see the biggest transition or transfer of wealth by these generations to the Gen X, to the millennials, and even to the Gen Zs in the coming 5 to 10 years. And it will be very interesting of how this wealth transfer is going to happen. Big chunk of it is in real estate and also pension entitlements. Obviously, that would be distributed across the family. And more importantly, growing up in a capitalist world today, as you can see on the left, 1.1% of the total global population holds nearly half of the entire wealth, 45.8 or 46%. So it'll be interesting to see how this asset transfer will happen. And even if that asset transfer happen, will it be switched out into other assets? In the past, crypto enthusiasts, observers, and also fund managers was postulating that some of this wealth in the older asset classes, when I say older meaning real estate, land, will be converted over to crypto. So that's yet to be seen with the collapse of the crypto markets in 2022. But it'll be interesting to see whether those asset classes remain relevant for the future. I still think it is. I mean, real estate, people still need a place to stay. Pension entitlements, I think most of it will be cash converted. And the others, that's where, equities or other kinds of asset classes, gold and all that. It'll be interesting to see how that asset class conversion will happen. So to elaborate more, a big chunk of it is being held in real estate as well as corporate equities. And I do postulate that real estate may see a significant change in the asset class, because for reasons like, very simple example, some of the children may have migrated into a different country, or they have moved to live in more urban areas, and this real estate being passed on to them may be in an out-of-town location, that they may find it even more of a nuisance to actually keep it rather than to just liquidate it. About corporate equities and mutual fund shares, I think that's very easily transferable, and there is a longevity element to it. You can just keep on holding it because it's very liquid, easy to transfer. Pension entitlements, the same thing. But more importantly, the point I'm trying to get across is a huge transfer of wealth, 68 trillion from the baby boomers to their children. And most of them are in the millennial cohort today. They are about to inherit about 68 trillion by 2030. That's a big sum of money, guys. So what are the key takeaways of this theme as an investor? How do you use generational data to your advantage? I think first point is really different generations consume different products and services very, very differently. I'll give you an example. A digital native Gen Z will never understand why he has to queue up and wait in line in a bank. And the reverse would be for us, like the Gen X and the baby boomers. We grew up, knowing or using checks to pay for high-ticket items. But for Gen Zs, that's where they were, attracted to things like crypto, because instantaneous transaction times, big amounts and all that, and very low fees. And because they are more digitally savvy, they are more aware of the options available to them as compared to the baby boomers and the Gen Zs or even the silent generation time. Secondly, I think because the population now lives longer, it requires a plethora of services. For example, better healthcare, better geriatrics care, more access to mental well-being, more access to even supplements because of the change in nature of the food we consume today. These are all services, especially in this whole theme called the wellness industry. I think that really demands us to look a little bit deeper because of the longevity of life that we see in our transgeneration today, actually. The third point is that millennials and Gen Z actually are facing more and more mental and well-being issues, more than their previous generation, and they require more guidance. And I foresee the rise in services providers, giving these services more guidance and how they can actually charge for it. You see the rise in yoga practices. I mean, if you look at the baby boomer generation and all that, when you go to yoga, it's considered a luxury. But today, meditation is not just reserved for the monks, right? It's a lot of younger people adopting all these practices to get better well-being. And yeah, I think going forward, I think this is just a growing trend. The fourth thing I see is more of a question rather than an opinion from me, is that how can our pension systems that have been designed for the industrial age, they have been designed for a demographics that is very fat at the bottom. That means new high fertility rate, growing population, and growing amount of money being pumped into the pension system to feed the elderly generation. It's usually smaller. How will that change? Will the policies actually change? Will it be enough to sustain the baby boomers and the Gen X when we retire? That's something that I'm very curious to see whether that policy still upholds itself. And last but not least, the fifth one is actually, if we were to position ourselves to witness the greatest transfer of wealth in our generation, how and where we can actually position ourselves. One, I think, is the changing of asset classes. Two, I think it's really about providing services to help them understand and help them guide and be authentic about it, because today there is no such thing as information arbitrage or information disparity. Everything is searchable by the internet. I think trust is something of a high currency or high value going forward, because it is such a transparent market today that the millennials or the Gen Zs who are digitally savvy, who live in a world, they grew up in a world of Google and search and YouTube, you cannot use that information arbitrage anymore. But more, I think you should put forth, especially to people within the financial services industry or within businesses that serve this younger generation. Authenticity and trust is key, and now you can build that trust with scale using social media. So yeah, that's one way I think as investors you should look at businesses that prioritize authenticity and trust and build that trust at scale. So the second theme I want to talk about is the Great Resignation coupled with the Great Layoff. And I took that theme on because looking at the tech layoffs that happened recently, I feel there's an overlap or intertwine in between the factors. Obviously, resignation is on a voluntary basis and the layoffs are actually on an involuntary basis. But I think there are certain overlap criteria that I want to discuss and in relation to an investing theme. One, if you look at the charts where I'm showing now, the quit rates, obviously the highest are the leisure and hospitality industries, because I'm not surprised, because very long hours, time is not dictated by you, and you don't get paid as well as probably the tech industry or even the construction or even the oil and gas industry. And obviously people do this work in exchange for a certain kind of income and hopefully happiness. But with long hours, little pay, I think that's very much of a reason for them to quit. The average quit rate within all industries is roughly about 3%, but obviously some are outliers like the leisure and hospitality. More importantly is this: the job market is on fire because of that. I mean, in 2021, when the pandemic hit and a lot of demand was exerted on the employee, long hours, the risk of getting COVID, being in the front line, the employment market just went on fire, and it has now reverted to somewhat of a mean, 4.8% in post-2021. But it also gave a realization to a lot of these employees that are either laid off or either left because of well-being. There are actually alternatives. And these are the alternatives that are preventing or stopping these people from going back into full-time employment because of this next catalyst. Before we touch on the catalyst, I just want to show some statistics on the great layoff. Look at Meta and Amazon combined. They're laying off roughly about 21,000 people. Meta shedding 13% of their workforce and Amazon 3% of their workforce. And the tech layoff has been brutal in 2020. I mean, this is in anticipation of the recession next year. But even then, I mean, a lot of these guys probably were middle-level executives or even young executives, families to feed, and now they are left scrambling to find a job for the new year. So as mentioned earlier, I think the catalyst for them who got laid off or who resigned and them not wanting to be an employee anymore is actually the rise of the sharing economy. Now, why do I have this hypothesis? A lot of the guys that I've met in Grab, driving Grab, some of them were bank officers in this part of the world, in Malaysia where I live. This is an option for them because they wanted the flexibility, they wanted this opportunity to give them more time to think about their next career move. And it does put food on the table. And if we look at developed countries where this is even more prevalent with all this transportation, finance, consumer goods, professional services app, it actually helps match or aggregate the supply and demand, which in the past, it didn't happen. I mean, if you look at taxi drivers in the past, some of them would tell me they'll drive around hotel blocks or shopping blocks in circles just to look for customers. And it was such an inefficient way, an inefficient use of resources to match the client and the provider. But with the plethora of all these sharing economy apps today, it leads to better transparency, pricing transparency, better matching of services, better feedback mechanism. Now, in the past, if you got into a bad taxi ride, what were the available feedback avenues for you? There wasn't many. And now with technology, now with the ease of entry for both the providers of service as well as the consumers coming onto the platform, I think that aggregation has opened up new frontiers in how the sharing economy can make our resources more efficient, can give customers better leverage to better service, and also scalability on behalf of the aggregator as well as the provider of that service. Now, imagine Fiverr that existed probably only a few years ago. In the past, someone like me in Malaysia, we could not get resources that were available for us in India or in the US or even in Russia, programmers in Russia. But because of all this aggregation of services, the scalability of how we will look for them has just made the market more efficient. No doubt there are some bad hats, there are some kinks along the way when these guys were developing that ecosystem of the software. But you cannot deny how much more efficient, how market transparency has actually leveled up the playing field. I mean, in the past, if you were a small player, an SME that wanted, certain services to be done, and you could not find players here that could provide the services for you, now the world is your oyster. You can get services, good rated services at a fraction of a cost, and you do not need to hire them full time. And these were only reserved for big conglomerates or big corporations in the past, that you can have a full stack developer in-house, and when the project is gone, he's left doing idle work. But today, project is scoped clearly, and services is defined in a timely manner. And I think this has led to the rise of people going freelance, those in the great resignation cohort, as well as those who are laid off today from tech. I'm very sure there is a ready market of SMEs. It's just now how you match that supply and demand through these platform aggregators. And I'm actually looking forward to seeing more of this mushrooming and probably, it's a double-edged sword, regulated, because I think market forces, to a certain extent, while they can police bad hats, but certain regulation can also help alleviate the fear of people using these services. So some gig economic stats for you: 94% of employees today would consider non-traditional employment. That means they no longer want to look at a 9-to-5 employment. By 2027, they predict that 60% of the workforce is going to be independent professionals. Wow, interesting stats. And 64% of the gig workers actually say they prefer it to traditional employment. What they what they actually mean in subtle manner is that they want a more balanced lifestyle instead of being tied to an employer. And I think today's day and age does not reward employee loyalty as well. I mean, can you imagine if you're talking about 10, 20 years ago, if you work for a company as big as, like, let's say Exxon or Shell, you're kind of like an employee for life. But in today's capitalist world, I think employee is not that well rewarded in terms of loyalty. And I think this is a safeguard mechanism that, you know, professionals can look forward towards to when they jump onto the gig economy bandwagon. Here's an interesting table for you that I discovered while researching this topic. Ideal, this website that I found this table on, they compared the wealth of a doctor as compared to a plumber. And the doctor, on his 25th or 26th birthday, he's actually still in student debt and still trying to pay off his debt. Whereas for the plumber, by his 29th birthday, he's 20 times more wealthier as compared to the doctor at 40,000. And the plumber can, you know, be in the range of 830,000 US dollars. And if the plumber played his financial literacy cards or investment literacy cards well, he is well into financial freedom by his 38th birthday, you know. So there you go. It's the rise of skill-based versus academic-based. That was the point I was trying to bring across, because I was just having an interesting discussion. My brother-in-law was visiting, and he runs an M&E contracting firm. He had interns actually wanting not to work for him, but to go into a factory, have a stable job as a technician, and kind of like a shift, kind of fixed hours. Whereas if you were to stay in a contracting firm, there are possibilities of you taking on projects and gigs. But that kind of like was shunned by these younger interns. Perhaps one, due to lack of experience, they want stability more than anything else. And secondly, I think my brother-in-law, him, is struggling to find skills-based workers because it's being shunned by the younger generation. Is the 3Ds are dangerous, dirty, and, you know, I can't remember the last D. Yeah, but you get the point. And I predict, my hypothesis is that it would actually come back in a very, very big manner. We've already seen it in countries like Australia, in countries like Germany, where the plumber gets to dictate his time because of his, you know, demand, versus that of a doctor, where, you know, is such shortage of labor, of plumbers or skilled personnel. And I think more and more younger people, if they shun all these dirty jobs, it will create quite a big vacuum that will be fulfilled by enterprising younger entrepreneurs who don't mind doing the dirty work, don't mind slogging it out and building that experience. And that's where the demand will come for in the future. You get paid by your hands. So the third theme that I want to talk about is food security, or the food supply chain. Now, I'm going to start off with a question. Do you think we produce enough food for the world or the global population as it is today? The answer to that is actually yes. We produce 150% of the food our global population requires on just 13% more use of land as compared to the 1960s. So if that's the case, if we can feed population size of 10 billion where we are only 7 billion currently, why is there still hunger in the world? Why is there not sufficient food and equitable supply to the rest of the world? That's a question that I fumbled myself when I was researching into this topic, and what I found was pretty interesting. We start off with the context of who are the four heavenly kings of the food supply industry, and they are known as the A, B, C, and D. Now, don't worry, A just stands for Archer Daniel Midlands, B stands for Bunch, C stands for Cargill, and D stands for Louis Dreyfus, which is based out of Amsterdam. There's a new player in town towards the four heavenly kings, and they are known as COFCO, one of the only state-owned commodity trading firms around the world that's Chinese-owned, that have entered into the kingdom of the four heavenly kings. So why are they known as the four heavenly kings is because they control 90% of the global grain trade. They're also huge in meat production, food processing, biofuel, and even fertilizer. So just imagine anything that is being put on your table, food that is being put on your table, chances are it would have come from one of these four heavenly kings, or now the five heavenly kings that control the entire food supply chain. So why is it important to understand the ecosystem of these four or even five heavenly kings? Because of their scale and the size of where they are, they have a very big influence in determining prices of food. And not only that, they have such a big clout that they can determine the kind of crops large-scale or industrial planters actually plant on their land. Because of that, when you have preferential farming, certain food staples that may not be commercially attractive enough to the farmers get pushed aside in exchange for more commercially viable crops. And because of the reduction in supply, demand actually is consistent or growing, that therefore food prices have actually increased, and that is a burden to especially less developed countries that rely on these food staples. And therefore a lot of food technologists, food observers, food policymakers are trying to change certain culinary habits that help reduce food inflation, especially within the African nations actually. The second point I want to bring across is that understanding, even though we have 150% of supply, not all of it goes to human consumption. Only 55% of crops being planted are consumed by humans, and the rest are being used as animal feeds and biodiesel, biofuels. The heat map on the left actually shows you purple is where a lot of these planted crops are being used for feed and fuel purposes, and the greener it is shows that it is more for human consumption. As you can see, predominantly in India, a lot of what is planted is being consumed by humans. But if you move towards more developed countries in Europe and in North America, where industrial farming is actually very big, a lot of it is actually consumed as animal feed or even biofuels. So if you couple all these reasons that I mentioned earlier, even though we produce 150% of the food we need globally, but due to commercial demands, due to commercial viability, the food does not necessarily get to the human consumption needs. Because of how large scale and how industrialized agriculture is today, commercial incentives dictate where this produce finally lands. Now, before we start going around and blaming the ABCDs and the Costcos of this world to the insecurity of our food supply and also rising inflation, please take a step back and look at the thing holistically. Without the industrial scale and without the purchasing power of these guys, I don't think would have brought down the cost of food so much. I mean, only with R&D expenses, only with buying things at scale and bulk, then only you can reduce a lot of these food prices that are a fraction of the cost of if you were to think about them in 10, 15 years ago time frame. Secondly, rising income has dictated the need for more poultry, more meat, ruminant, and also dairy products. Because of that, commercial incentives dictate that the ABCDs of this world start focusing on those cash crops that can feed the growth of the poultry industry, the ruminant industry, and the dairy industry. I think again, commercial incentives play a very, very big role. They can't be all altruistic and giving out and doing charity, and that's the Achilles heel that has brought us to the scenario where it is today. Now, before you start pointing fingers at me for supporting the evil capitalist system, think for a moment how we can enjoy Kobe beef at the price that we pay today. Without industrial farming, without the logistical supply chain, do you think that we could even enjoy Kobe beef in one part of the world, or even enjoy macadamia nuts that are not planted here, or even kiwis, or whatever exotic fruits that are not available locally within Malaysia? But at the same time, we have to be cognizant that the dominance of these large-scale players have become so large, and there's nothing much of a replacement or an alternative today. So therefore, as an investor, you may not be able to solve world hunger alone. There may be some creative ideas in the future or even now that is being tested out. But I think I'm just here to point out that that is the ecosystem. That's how fragile our food system supply chain is because of the dominance of this few. And as an investor, that's how you can position yourselves by buying dominance. Let's all be cognizant as well that it is not all altruistic and that this dominance actually come at a price. So there are some marginalized parts of society that may not enjoy the fruits of capitalism. And here we are, we cannot be pointing fingers at these guys and say, hey, you guys, are destroying all that when we are happy consumers. That makes us a bit of a hypocrite, don't you think? So here again, I'm just laying out the facts. The choice is yours to make, but they are big for a reason. And that's why I painted this framework of the supply chain for you to decide. So there you have it, the 3 themes that I've been looking at that I feel has longevity apart from just 2023, but more long tail. I know things like the semiconductor industry and electronics industry also have a very long tail, and this is definitely not an exhaustive list. This is what I felt could be covered within 20 minutes. And I feel that by digging deeper into these themes, there's definitely opportunities for us as an investor. There's definitely opportunities for us, even as an entrepreneur, that there is an unmet supply and demand scenario. If you enjoy content like this, subscribe to the channel, give it a like so that it can reach more people, hit that notification bell so the new videos are out, you'll be notified. And more importantly, looking forward to your comments, reactions below on what are the other themes that are so ubiquitous but below the radar that no one has thought about, but you have observed because of where you're working, your industry exposure, and other products or services that your friends are raving about, but it's just not being surfaced. So looking forward to your comments.